following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create new agreements based on respect and love. Take the responsibility to make new agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination and explore all the possibilities. Market-wise, let's take a look at it out here. We have the Dow Industrials down 162. You get the Nasdaq down 7. S&Ps are off 11.5. Gold contract up $1.10, trading at a price point of $13.19 an ounce. You have silver down 2 cents, $16.32 an ounce. Copper down 5 pennies, $3.10 a pound. Light sweet crude off $1.34, $61.68 a barrel. Notes and bonds. You get the 10-year note up 8 ticks, 120.20. 30-year bond up 29 ticks, 144.15. King dollar. King dollar's up 300 ticks, trading at 90.580. The euro is at 122 to 1 U.S. dollar. The yen is at 106.67 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Let's get over into the futures market first. Take a look at this baby. You've been trading in a range. We just broke the range. Looks like it's going to be rejecting lower price inside this range. So let's bring this up. We'll bring this up on a 10-minute bar first. So I bring this back. Let's see what we got. Okay. So first off, guess what? You get a high-volume spike now. So when we close up this market out here today, whatever kind of bounce we're going to get, I expect we're going to get to lower price. Why? Because what we did here is that we were at the range that we were in out here today. The low of that range was approximately 27.41. You broke this with conviction. Right now you're on, let's see, we got, yeah, you're on 9 minutes of the 10-minute bar. You get 49,000 contracts when we broke it. That's the largest 10-minute bar we've had all day. So bottom line, yeah, you get a bounce out of here. As we come into the close, once again, more than likely you're going to go down and nail that baby. We go take a look at the E-minis, the NDX 100. NDX 100 today had a high of 69.70. We had a low of 68.93. I believe we were just at that low. In fact, the E-minis, no, the NQs didn't make it down to that. Same type of setup, though. What you have inside here is this. You had the first low of today was established at 11:40 a.m. That baby had 14,289 contracts. This bar here is 15,000. Now, you didn't break the low, but bottom line, that's saying you're going to be back down into the 69.03 area. So what you can expect is that you can expect more volatility into the close, and more than likely, we're going to probably sell off coming into that close. Notes and bonds. Let's go take a look at the note and bond market. So this is going to be about as deviant as you can get, too. You had the 10-year. Right now, we are trading at a price point of 120.20. You've done 293,000 contracts. What you have looking at this baby is that, number one, you went higher on Monday with volume. That's 121. That's saying, guess what? It wants to get up to that price point. Then what did we do yesterday? you dive down with 2 million contracts. That's when Powell was speaking. Bottom line, you were going into 2.4 million. Guess what? You pull back. You have lighter volume on the pullback. What does that set up? That's setting up higher price. Out here today, what do we end up doing? Bottom line, you rejected lower price. You had really light volume. This thing wants to go higher. The real question is going to be, can it actually get something more than a dead cat bounce going? That would be about the most deviant thing that it could do because of the fact that fundamentally it seems that interest rates should be going up. We're going to take a look at the 30-year. 30-year is up 29 ticks. Same type of setup as the 10. Bottom line, you came down. You rejected lower price. We already have a high volume high, which is generated out here on Monday. Bottom line, that the 30, this is pretty cool now. The 30, the 10-year had broken its downtrend last week. And the downtrend we're talking about, this has been a long downtrend. The downtrend we're talking about started on December 29th. 30-year, bottom line, broke it also, you know. So that's saying, guess what? Higher prices coming at us. If we take a look at the yield right now, the yield is 2.868 inside the 10-year. The high for the year is 2.950. Some of the higher volume stocks out here we have today, GE's the leader. GE's in tough shape, folks. GE's down 35 cents, trading $14.14. You have Snap is up $1.29 at $17.35. Celgene's getting taken to the cleaners. That's down $7.80. 9% trading $87.85. You have Discovery Communications down 152. Frontier's off 220. That's a big number for Frontier. Frontier's only $7 stock. So no doubt that is one large number. And Lowe's, where's Lowe's? Lowe's is down $6, trading $89.71. Our phone number is 877-927-6648. Let's get over and take a look at that gold market. Gold market out here right now had a low out here today of $1,316. We're at $1,318.80. This baby also came back fast and furious yesterday. That being said, you still came back with volume of 335,000 versus 423. Now, what we don't have, gold is not holding the 1319 area. That's what it has to, you know, I know you're 10 cents underneath it, but the bottom line, that's a crucial number. The reason it's a crucial number is that that's where we broke topside from the 14th of March, of February, rather. The longer that we stay under that number, the higher the probability goes that you're going to go test the lows that were generated out on February 8th. The February 8th lows are 1309. Let's go take a look at the silver market out here. Silver out here right now trading at a price point of $16.40. That little baby continues to need and want, well, I don't know if it doesn't want a bounce. I'd like it to get a bounce. Bottom line is that silver hit a low today of $16.36. Right now, we're trading at a price point of $16.40. Bottom line, this thing's got to catch a bid in order to get the higher price. You stay right there, folks. We'll be coming right back. Dow Industrials right now trading down $1.32. You get the NASDAQ flat. S&Ps are down 8.5. We're coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 159. You get the NASDAQ off 12. S&P's, the NASDAQ is down 3. S&P's are off 11.5. We go over to that futures market and take a look at some of these commodities. You have sugar up to 3.9%. Wheat's up to 3.7. Cotton's up 0.8. We go to that wheat market, and you're going to see a big number out here on wheat today, folks. It goes topside, has the volume behind the move. If we do put wheat on a continuous contract, what you're going to see is that you not only get a break topside in this, bring this back, you're going to see that this had already established a nice little base. It broke out of the smaller part of this base when it got over the 464 today. That base has been in place since July of 2016, so it looks like wheat is making its way up to this 553 number. So that's going to be a monster number. No two ways about that. We go take a look at the oil market. Oil numbers came out today. Crude oil right now is down 2.4%, 2.1% rather. We are trading at 61.65. This baby, bottom line, couldn't handle higher price. Comes down and comes down with juice. Right now, where this is set up is that we're going to have the light sweet crude market make its way back to the February 9th swing area, which is down at the 57.90 area. Let's go into the XLF, the financials. Financials out here. This is where you get some monster divergence. The bottom line is that the XLF has not been able to make it up to its highs. You know, fundamentally, the setup would be that rates are going up. Your yield curve is perfect because it is not contracting or flattening out. The bottom line is if you put this curve up, what you're going to see is that it's widening out more than anything. So the bottom line is that if you look at the curve, that would be saying that the bank's going to do just fine. You look at the equities, however, guess what? Not the same ball game. So XLF right now, yesterday you got to a high of with 29.77 with 72 million shares. That being said, you're going into 73. It's back down into the lower range. That's saying that, hey, guess what? Now, what you do have, you get a failure of price, failure at volume at those highs. That's saying lower prices are coming at you. If we go and take a look at Sun Trust, what you're going to see with Sun Trust, when I was doing a workshop yesterday at the Traders Expo, bottom line live, actually, that this is where this was failing. It got to a price point yesterday of $72.51. Bottom line, coming into the last swing point, didn't have it, failed on price, failed on volume. And what this sets up is that you set up that you want to run down into this February 6th time frame. Now, that being said, and even how the market is trading right now, you got to remember something, folks, that these next couple days, you're in window dressing. So bottom line, this market can get a quick snap. Now, watch this, though. This gets interesting. If we go back and we take a look at window dressing last month, guess what? That's when the market took a conniption. Bottom line, it actually topped out on the 29th. On the 30th, it goes from 284 to 281 when you look at the S&Ps. Went sideways for the 2 days in window dressing, and then start going south on the 2nd, which still would have been window dressing, and then bottom line, it blew out. You know, on the 2nd, we were at $280 in the SPY. 5 days later, you were at $252. So bottom line is that the next couple of days, you can expect that the volatility is going to be high, and you're going to be moving around. You're going to be moving around quite a bit. We go over and we take a look at that S&P. When we started the program, it had broken the consolidation that it's in. It had the volume on the break. We pull this up, and what you're going to see is that now you're getting away from the break. The break was 27.39. You're 27.32. And there's not much to stop this thing coming down to about the, actually, this will get interesting because right there, well, it's 27.27. You know, there's really not much to stop this thing from 27.26, which is what, another 7 points from where we are. That would put the S&Ps down $21. And right now you're down 14. If we go into the Dow Industrials, we take a look at the Dow. Dow Industrials right now are down $1.95. We take a look at who's putting the heat inside the Dow out here. Is that you got Caterpillar is putting 34 negative points. United held 31. 3M 25. Goldman 21. Bottom line, things are great when the Dow is going up because, of course, it's a price-weighted index. And what you have is that when you're going up, it's great. When you're going down, it just takes the cleaver out and gives it to you, and gives it to you pretty quickly. Some of the, we go into the NDX 100. We take a look at the strength versus the weakness inside the NDX 100. The strength out here, oh, what's this stock? Booking Holdings. Let's take a look at this. I've never even seen this stock. That's really wild. 1 second. Booking Holdings. Okay, so operates an online travel company. The company offers platform allows travel reservations and bookings. It hit a high today of 2087. Someone taking this over? No, just bottom line is that it's come out of nowhere. That's the #1 leader inside the NDX 100. You get Mealy, which MELI. That's a large internet stock. That is up $3.52. Oh, is that Priceline again? Booking? Oh, they just changed it. I see. Interesting. Thanks, man. Appreciate it. Wow. So oh, that's really cool. Okay, so Booking Holdings Equity. That's Priceline. They changed it. What a trip. Okay. O'Reilly Automotive is up $2.9%. You have Marriott up 2.5. Now taken away from it on the way down. Okay, let me get you the charts back up. I don't know why they didn't stay up. Sorry about that. There we go. On the way down, you get Celgene down 8.2%. You get Dish off 3.3. Express Scripts is off 3, and you get Liberty Financial down 2.5. So we get big numbers right across all these indices out here today. There she goes. She's blowing south. We go to that S&P again. It's like, take a look. You know, now you're down 19. Yeah, this is 21's gonna be easy in this baby. Okay, so you got an expansion of volume again. Look at this. We were just saying 27.27. It's already 27.28. Okay, so let's do it this way. So we got an ABC down. Let's see what the ABC down is. The 8-point is 27.87. Ooh, that's a good one. We're talking about $49, which would get you. No, it's finishing it up. You know, $49. That's 27.11. That's approximately 27.11. The A to B equals C to D is 27.11. The lows that were generated out here last Friday is 27.13. I don't think you're going to get that to the close because it just took a little energy to get down there. But that's saying that's what that is setting up. Dow Industrials right now down 211. We have the S&Ps off 17. NASDAQ Composites down 14. The NDX is off 12. We'll come right back, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. If we go over to Herbalife, so check this out. This is pretty intense. So you had Bill Ackerman that has been having a 5-year battle with being shot Herbalife. I just want to pull up the, yeah, it looks like Kyle Icahn won this one. He's still in it. So when you're looking at Pershing Square here, it says that Pershing Square is still short 7.4 million shares. Let's see what Ackerman says. Ackerman is saying, he is saying that he essentially unwound this bet against Herbalife. So let's see. He owns 8.5. We shot 8.5%. You know, it's interesting here. What I don't know is the rule. I know if you're buying and you own more than 5%, you have to file it. He might not have to file it if he's selling. Well, I expect, bottom line is that probably will change. That being said, so you get a 5-year battle. Icon won the battle. And if you take a look at the stock, it's pretty wild. It had been trading in the range between $73 and $47. It goes topside last month with 20 million, and it breaks topside today. You know, that being said, watch this. This gets interesting. So they still had it listed as shot 8 million shares. There's 87 million shares outstanding. If you happen to watch Tiger TV, they're saying that it's 15% short position. Now, that would be saying right now, if we close that position out, which he's saying is closed, you take 8 million, that would be saying there's only 1 million short. This is an equity that we're going to want to watch. Why? Because what tends to happen is that when you don't have anyone short anymore, guess what? Bottom line is that as something happens or anything happens, guess what? Bottom line is that there's no unnatural buyer. That's how that comes in. I mean, because you had a 15% short position each and every time was going up. Bottom line, for 5 years, he had to basically try to cover those positions even on a short-term basis. Pretty wild. Now, I'm going to go over to United Technologies because on the same article, what it was saying is that he was getting into United Technologies, and let's see what United Technologies is doing and what kind of ownership he has in there if we can find him. So, Pershing Square, that's the name of his company. So let's just look at the last filings. Yeah, see, this is interesting. So, he doesn't stick out right now. What he does do, though, is that when he comes into positions, and that wouldn't necessarily stick out here, when he comes into positions, what he does do is that he comes in many times inside the option market. If it's inside the option market, that wouldn't stick out in this particular case. Let's go over to take a look at the XAU, the HUI. They both had taken a hit yesterday when Powell was speaking out here. XAU right now is trading at a price point of 78.64. We are coming into a 53 million. That's good. It's not bad. We get a whole price, but this is what's going on. We're coming into 63 million. The last low in the XAU, which was established on the 9th of February, 53 million shares. You came into that yesterday with 32. What you're going to see out here today is going to be even more of a contraction of price. So now what we need is a rejection of price. You have the volume going with you. You have the contraction of volume that is going with you. Gold Bugs Index. Oh, this one's going to get dicey. This is going after its lows. So Gold Bugs Index, we're coming into the low that was established out here on the 9th of February. 34 million shares. Yesterday it did 21. Okay, that's cool. Price is 170.89. Right now you're at 172.93. So bottom line is that each one of those need a rejection of lower price in order to basically get a turnaround going. We go take a look at the GDX. Inside the GDX, what do we have? So the GDX yesterday did 68 million. You're going into 101. I like that setup. You know, now we need a rejection of price. That's on the daily. We flip this on the weekly, and what you're going to see on the weekly, we're at crucial territory right here. $21.14 is crucial territory. The reason being, we've been in this consolidation since, let's see, January of 2017. So it's a long time. Contraction of volume is good, but bottom line is that you need the contraction of volume. You need the rejection of price in order to get into a higher price. We go back over to those S&Ps for a second. They're going to bleed these babies off coming right into the close. Right now, you're at the 27.29. I think the was 27.11, right? That A to B equals C to D was 27.11. And the lows of yesterday was 27.13. Pull this back just a bit. Okay, so let's see what we got here. We're at, you're at 6 minutes into this bar. You had the high volume even at the low. You get a nice contraction right here happening. So this would be interesting. I think this is just about it. That's what it looks like. It looks like it wants to do a little bounce out here. But what you'll get, you got to remember something. When you break down like this and you're breaking with volume, your larger picture is 27.11. Shorter picture, you just used a huge amount of strength and energy up. We just went from, in 1 hour, when I get on, you went from 27.58 down to this 27.27 area. So this thing probably trying to bounce somewhere to 27.41, $7. Nothing heavy. I don't expect anything heavy out of here. We go back. Let's go to the small caps. We take a look at the small caps, the IWM. Small caps right now, we are down $1.46. You have an expansion of volume on the way down. Hey, the small caps look like they're going to go for the highs and lows next few days. So it'll be interesting to see what happens in window dressing there, because now we're talking 147 inside the IWM, and right now you're trading out at 151. And 147.94 is the high of the low that was out there. We go take a look at, let's go take a look at Walmart and Amazon. These guys are fighting out like crazy. Bottom line, Walmart at this point is the loser. We've just gone from $109 to $90. That's quite a hit. $19. $19, and it looks like about 19 days. You're breaking low. You broke below the gap. That sets up Walmart down into $81. Right now you're at 90. We go to Amazon. We take a look at Amazon. Amazon's still at highs. Bottom line up $7. That's holding at highs. GE is in deep trouble. You're at $14.16. Now, what you're gonna get with GE, you know, the last low. This may be close. Yeah, this would be the lowest closing low. If we close right here, this would be the lowest closing low. That'll, you know, get some press. But you break 14, like, you get into 13, oh man, that's going to get some more selling done. Why? It's just stock-wise and percentage-wise, that is a monster move. You stay right there, folks. Come right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses, along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down $1.86. You get the NASDAQ off 3. S&Ps are down 14.5. And as you come over to our website, folks, at TFNN, this is it today. It's hard to even comprehend how fast time goes. Bottom line, this is the last day of February. We have had open house all month long for the Tigers Den. What the Tigers Den, folks, is a state-of-the-art trading room. A lot of great Tigers and Tigresses in there. You can come in, bring your friends in. This is the last day that you can get a full 30 days free. Check it out right at TFNN. All you do is hit that button. You get 30 days free. The way the volatility is in this market, you get a lot of great eyes, great ears inside the marketplace, and you have nothing to lose and everything to gain. Let's go over and we take a look at the rest of that commodity market out here today. Inside you had, let's see, cocoa is down 0.4%. Copper's off 1.6%. Hogs are off 3.9. You got gasoline down 2.5. Let's go first into the copper market. So copper's been in this large consolidation. We are trading $13.13 per pound. This is down today on 91,000 contracts. Well, this consolidation is still game. You know, the top of the consolidation is approximately 330. The bottom of it is here at 295. Last time we got down into December 9th, we were down there at 304. Let's go to the biggest copper stock out here, because this is a broken topside last week, which is Southern Copper, SCCO. See what SCCO is doing out here. Yeah, it's staying topside. This is an ABC up. This is pretty intense. You get, this is saying the copper's still going to go higher. You know, you take a look at this. This is a decisive break. You know, Southern Copper was in a consolidation for 10 years. 47 was the highs. Started in 2007. The lows, not the low, well, the bottom of the consolidation is approximately 21. You broke topside, and bottom line, the longer that you stay over $47, the more probability is that you can go a lot higher. Taseco now, which is another copper stock, that couldn't handle price. So there's something else that's going on with that. That was even when copper was flying high. Taseco is getting smoked out here. That's the stock has gone from let's see, from January went from 237. You're at 122. Let's see what this is trying to do. I see. Okay, so bottom line, this is a consolidation too, but it hasn't been able to make it up. So this is dangerous. So you have game here. This thing can get into $69, 69 cents, 44 cents. So there's something that is not quite right into Seiko. Bottom line is that they just did a corporate presentation for February. Whatever that is, market's not digging it, that's for sure. We take a look at the UTX. That's where I was going with UTX, because Ackerman now is in UTX. He's accumulating UTX. That's what the article said anyway. Bottom line, UTX, you know, the highs out there look to me like they've already been established. You have 139. You know, you came down hard. You came down to 122. You rejected the higher price out here today. You're going to have volume wasn't bad, but that didn't make the swing. The swing up there is 139.24. You're at 138.50. That's up another test of the 122.21 level. That baby right there. And the market itself, that's how the market, folks, is also set up. So what I expect you're going to see is that this baby, these high volume lows, they're going to get tested. The real question is that they're going to get blown by, and is it a monster ABC structure on the way down? S&Ps out here, they just took another leg down. We got to 27.21. Bottom line is that we'll see whether that can get into that 27.11. You're going to remember that ABC structure down is at approximately that 27.11. We'll go into the NQs. We take a look at the NQs out here. NQs, they had quite a price spread out here. Thus far, we've had a price spread of 96 points inside the NQs. They blew apart the swing point here. Now, the NQs, because they went up so fast on Friday, there's not much holding the NQs up right now. Once they broke the 68.93 area, you're at 68.95, 85 right now. Bottom line is that because of how we went topside on Friday, you got to remember on Friday at 10 o'clock in the morning, we're at 67.92. And bottom line, you scaled Friday at 220, 240 rather. Had another huge, basically up move. So there's not much in between the 69.02 area to the 68.18 area. It's always dangerous when you're coming back down into those areas. Why? Because you haven't built the floor. That's the bottom line. You haven't built the floor in order to basically get some support inside of that. Notes and bonds, they want higher price, you know, and what it looks like that we're seeing right now, this is going to be pretty wild if we do, is the 30-year did break the downtrend. Real question is going to be, can they get some juice as we come into the close out here today? 144, we're right at it. 144.17. You launch this 144.17 in the 30. We can be at 144.27 pretty quickly. And 144.27 would absolutely, coming into this close of the market, what do we got? Yeah, you only get 12 minutes. You get that coming into the close of the market, that would give you a sign of strength. Let's go take a look at the volumes out here as we come into the close. Volumes in the NYSE, anemic. 560 million. That means we'll do about 850 inside the NASDAQ composite. NASDAQ composite right now is trading 1.8. So the composite is going to have volume. That'll come in with, okay, that's going to be another confirmation that this baby wants lower price. Because what you're going to have here, you're pulling back, you can have an expansion of volume. The composite right now has done 1.87. That means the composite will more than likely they'll put like 400 million in at the close on that composite. We go take a look at the let's go take a look at Microsoft and see how Microsoft is holding up. Microsoft right at its highs. It's not bad. You know, Microsoft's flat. Bottom line is that, and what Microsoft does have is that has volume up at its high at 96, and it's not backing off. You know, now it also has a high volume low at 83. So that consolidation there is in place. And, you know, we'll see what basically gets that going to the downside. Let's go to our man Victor. Hey, Victor, what's going on? Oh, I think I'll look at Victor. Just stay right there. As soon as we get back, quick break, and I'll look at Snap as soon as we come back. 877-927-6648. You get the Dow off 306. Nasdaq's down 20. Nasdaq's down 44. They're hitting that good. S&Ps are down 26. We're gonna be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We're talking with our man Victor. We are talking Snap. So let's go take a look at Snap out here. Snap is up 95 cents, trading at $17.27. So, Victor, what are we doing with this?
Hey, just one question. One thing I wanted to tell you. I read some good articles. When you have a market drop like that, 30 days later, it's always down more than that. And it's like some guy did tons of research on that, and he's kind of right.
Interesting. Okay, cool.
I think it's a big warning there. I'm just looking at Snap. I
think it was a warning shot. Yeah, so
it's going down. We're going down 20%. I say by March 20th because that's when the Fed's going to raise rates and ruin the whole housing market. He's already destroying it right now.
So, what are you doing with Snap?
No, I'm just looking. You think he'll close that gap? It almost did, but they came out with some like Warren Buffett announcement today. You know what I mean? Like how Warren, he kind of boosted the markets Monday morning.
Well, it got into the gap yesterday. Right now you're at 17.31. which is, you know, outside of it. This is normal that, you know, normally what happens, folks, is that it gapped up, went from $16.96 to $21.22, had good volume. You pull back, you get into the gap. That's a support the first time. More than likely, it's going to close up the gap. That's what, you know, that's what normally shakes out.
I'm going to buy.
Cooking, brother.
Almost, and check out VRX if you get a chance. VRX.
VRX. Okay.
My wife wants me to buy, but I say that's going to close the gap too.
Yeah, this is Valiant. It's going to close it, man. Don't touch it. It's and this is what's cool. Valiant, I suspect, is going to be a buy at that. The reason being is this. So watch this. Valiant's it's sweet. It's an ABC down today. Okay, so 24.37.
Yeah, today the earnings came out. They were bad.
Okay,
well, they were good to me, but whatever. They're restructuring their money.
You got $8. You got $11. There it is. The ABC down is $11, man, and the gap is $11.72.
Yeah, and there's a gap at 14 too. All right, so obviously be patient and wait.
There you go. Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. Stay right there, folks. We got lots of numbers coming out after the close. We get the Dow right now down 319. You get the Nasdaq down 41. S&Ps are off 27. We have gold contract trading flat, 13.18. Notes and bonds, 10-year note up 9.6, 30-year bond up 31, and King Dollar up 296, 90.570. Coming right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Learn to ask questions. It's always better to ask a question than to make an assumption. Have the courage to ask questions until you're as clear as you can be. Once you hear the answer to the question, you won't have to make the assumption because you'll know the truth. That's if someone tells you the truth, right? This card's a trip. Market-wise, let's take a look at it out here. We had the Dow Industrials down $380. You had the Nasdaq off 57, S&P's down 30. Percentage-wise out here, folks, what you had the Dow down 1.5%. Nasdaq down 0.8%, S&P's down 0.9%. And guess what, folks? Monster volume. So bottom line is that we did 1.1 billion inside the NYSE. Just to give you an idea of that, that means that they put 500 million in at the close. Okay, they were bailing at the close because last hour we were bringing this up. Inside the Nasdaq Composite, what do we do in the Composite? Same, well, not the same setup in the Composite. Composite did have the volume all day long. Composite did come down in juice, though. We did $2.3 billion in the composite. We go over to the small caps. So they take a look at the small caps. What you're going to see, IWM comes down to $28 million. That's after trying to get into a high yesterday with $18 million. We are at $150.43. This puts game on for all these high volume lows that are out here of the 9th of February. So bottom line is that you're coming into window dressing. And what's going to get so intriguing here, of course, is that last month they had some window breaking, and we very well could have window breaking this month also. Coming into the first tomorrow, if we do go look at what you had out here, you know, window dressing normally is a positive bias because what you have is that you have the IRA money coming into the marketplace. Bottom line, if it doesn't get put to use, the money managers don't get paid. What we had out here, the 30th, well, the market had topped out on the 26th, 28.72. On the 26th, on the 29th, because it was a holiday, we tested that. The following day, the 30th, we had gapped lower at 28.18. The window dressing did keep it sideways for 2 days, and then see you don't want to be. We went from 28.35 down to 25.32. Those are all high volume lows. We did a nice counter trend bounce. You got up to the 27.89. Bottom line, couldn't handle price. Now you're coming off that, and you're coming off that with volume. What does it set up? It sets up a test of that low. The real question is going to be, do you get a test of that low, or do we back down, we build some more cars, you blow through the low, you do a monster ABC structure on the way down. Gold contract traded flat, $1,318.90. Bottom line is that if you're in the metals market, you want gold about $1 higher. We go take a look at that gold contract, what you're going to see, and that's this pennies mean something here. The reason being is that what we did in the gold market is that we had the sign of strength on the 14th of February. It started out at 13.1910. We're at 13.1890. It's going to be hard to basically break down into the lows out here, but bottom line, you're in that bar. You're in that bar, and that's always dangerous. Silver also still couldn't handle getting a good bid going. Silver traded at $16.40. What did get a monster bid going out here today was sugar and wheat. Sugar and wheat, bottom line, went topside. We get over and look at that sugar market just for a second. We get sugar trading at 13.38. That's after it broke down yesterday in a big way. And this is going to be really intriguing watching this whole sugar market shake out. Let me see what we got with volume out here today. What do we got? Look at that, man. This is a perfect Joe DiNapoli railroad track. Pretty amazing, actually. When you get something like this, what you do is that you buy the next 0.618 retracement off of this. So you can expect if sugar pulls back, that would be a buy. That's how that does set up. We go take a look at the note and bond market. Now, this is going to get really intriguing. 10-year, as well as the 30, got off the lows, had a sign of strength off the lows, back down yesterday, didn't break the lows, which in itself is a huge day. The reason that's a huge day is that you had the Fed, Powell chairman with his first congressional testimony. The 10-year went from 120.28 down to 120.08. Volume, however, contracted dramatically. What we did out here today is it rejected lower price. Bottom line, looks to me like this 10-year is going to be off the low. And bottom line, 122.19 is game now. And 122.19 is from the high of the 6th of February. 30-year also came off the lows, have the juice behind the move. And this is about as deviant as it can get in both the notes and the bonds, folks. But guess what? This wants higher price. And this can just have to do with you get a market that is pulling back, and we actually just may have folks that start pouring more bread into bonds. You got to remember something, that the first downdraft in the market at the beginning of February really had to do with the 10-year moving higher, market saying, okay, guess what? Rates are going up. Now the real question is going to be inside of that market, are rates going to stick going up? Or, once again, are we going to be and stay in a low-rate environment? Right now, the 10-year is at 2.866. For the year, it's 2.950. We haven't broken into the 3% just yet. We go take a look at the King Dollar. So King Dollar is up right into its downdraft. We did 24,000 contracts out here today, 24,500 contracts. You're going into 40,000 contracts. We closed into the bar. Now, the bar of the breakdown, one of the breakdowns, 91,630 to 95.30. 40,000 contracts. Tomorrow's going to be a big day in King Dollar. The reason being is that you came into that low. You haven't got into the bar in a big way yet. We'll see whether it can do it. You know, it's going to need a lot more juice in order to do that. The way that the bond market is trading, it says that that baby is not going to get into that number, and it's going to fail on price, fail on volume. You stay right there, folks. We come right back. We had the Dow Industrials closed down 380, NASDAQ off 57, S&P's down 29. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's take a look at some of the high-volume stocks out here. We had GE down 39 cents, $14.11. That baby's going to go break that 13 level, folks. That high of the low of 2008 is coming at us. I believe that, let's go take a look at it first. I believe it's 11.58, I think. And this is going to be intense, man, because this looks to me, the way that we're barreling into it, yeah, 11.35. The way we're barreling into it, you get into that bar, man, and this is going to be a big scandal. GE is going to be down to 572, and I suspect what's going to happen fundamentally is that that good old capital markets, you know, the last write-off they had, bottom line was 5-point-something billion. That was going back 10 years. They got a few more of those under their belt out here that have been basically in the closets, and they're going to come out of the closets. Don't forget, folks, that you can get us all the time right on YouTube also. And that's a very easy way to get all the programming. You just go to YouTube, you pull up TFNN, just subscribe. It's free. Bottom line, every program comes up. We get a question right now on YouTube. It's from Scott, and nice question, too. Bottom line, he's looking at the SPY. So what the SPY has done is this. The SPY did do a 0.786 retracement from the highs to the lows. Bottom line, we started out at 288. You get down to a 252. The SPY came all the way back up to this price point of 278. Now, what you have, so this says a couple different things. When you do anything over a 0.618 retracement of a move, so we came down big, right? Okay, so you came down from 288. We got into the price point of 252. Now the trend, the bounce got us all the way back up to the price point of 278. So normally what happens is this. If you do more than a 0.618 retracement, on the first time down, you are not going to go break out the lows. So I suspect, number one, it's not going to break out the lows of 252, first time down. That being said, what you're going to want to watch for real closely is this. I expect, number one, that the 252.92 is going to get hit. The real key is going to be, number one, how we come down. We got an expansion of volume on the way down today. Then where we stop, and are we going to build cause after we stop? Because if that's what you get, let's say that, like right now, this looks to me like it's set up that you can get down to 268.17 really easy. And where I'm going with the 268.17, folks, is the high of February 8th, okay? So let's say you get down to that price point. Then you start consolidating again, you start building cause again. That's when big problems can take place, because then you're building a small ABC structure inside this large structure. You know, so number one, I expect that, yeah, the lows are going to get tested. First time down, normally you wouldn't break it. And if we go over to the Qs and look at the same aspect, the Qs got even a bigger bounce. They almost got to their highs. That Qs also had, you know, not a big expansion of volume down there. We did 40 million. It's not the end of the world. You know, we did 42 million on the way up yesterday, which was going into 32, you know. Bottom line, though, what you have with the Qs is like, okay, so 164 is game. You know, you come down to that level, build some cause, then you got action all the way down. I do expect the Qs are also going to test. I expect all these are going to test. They're all high volume lows. They're going to get tested. Real question is that when they come down, are they going to blow them away? IWM now, what's really cool here is this. The IWM had been the weakest indice for quite some time. IWM came down fast and furious. The IWM had gone from 160 down to 142. The 142 had already taken you back to basically September of 2017. The IWM got blown out of the water today. The IWM yesterday was going into a high-volume bar. We did 18 million shares versus 52 million. The IWM is confirming that did 28 million today, and let's take a look. The IWM very well didn't even do a 0.618. We'll see whether that did a 0.618 of the move. Oh, look at that. It did a 786 also. So that did a 786 also. So that's also saying the probability is that first time down, you are not going to blow away this low. But I suspect you're going to go right into that low. What you have out here today is that you do have the issue that you did the leg down. You came up with dramatically lighter volume. The NDX 100 and the NASDAQ just about got to its highs. Let me see if the NASDAQ actually did. They wanted to get to their highs. No, NASDAQ didn't. So the NDX 100 was the strongest. NDX 100 was the strongest. NDX 100 got to 7,003 when the high is 7,022. Bottom line, you came off it. You had the expansion of volume right across all the indices. And inside the NYSE out here today, we had 1.1. Inside the NASDAQ composite, you came out and you had 2.3. So bottom line, window dressing, no window dressing. It looks like we very well might be into window breaking once again inside this marketplace. Let me go see what the trend came in at today. So the trend, oh, this is interesting. So see, this is some selling. You finally get a little selling in this marketplace. We look at the trend. Yesterday at 2.14. Today we had 1.59. Now, anything over 1 means that you actually do have some selling. In order to catch into a bottom, however, you need a lot more than that. That's not even close. You can see that if we went back to the 5th, that's 3.6. The last time that we were down here, when it actually went down, there was less fear on the first leg down than there actually is on this leg right here. And you can see it right in the numbers. The 7th of February, we had 1.46. The 8th, 1.21. No fear whatsoever. You can see this is coming up a bit right now. 2.14, 1.5. We get into the VIX. Let's go just take a look at the VIX for a second. So the VIX right now is trading 19.95. That has movement underneath it too, and that looks like that's going to make a run after this. Look at even the lows of the high. 24.42 is gain. That can be gained pretty quickly too. So there's some big action out here. If we go over and we do take a look at GE, what you're going to see with GE, this may be, yeah, this is the lowest close that we've had. It's $14.11. Last lowest close thus far was $14.65. So this is in trouble in a big way. Let's. I know we had looked at Snap for one of the targets. We have another target that's just joining us in here. Snap right here is trading at $17.32. And what you have with Snap, you know, I wouldn't be buying it right here. What you're looking for is you're looking for it to fill that gap. It got into the gap yesterday. It had light volume, no doubt, but you get into that gap, the buy and Snap would be at $14.20. Right now, you're at $17.32. You stay right there, folks. We had the Dow Industrials finish down 380, NASDAQ down 57, S&P's off 33. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, as you come over to our website at TFNN, if you'd like to get into the Tiger's Den, we do this basically once a year. We have an open house in the Tiger's Den. It's a great trading room. A lot of tigers and tigresses in there from all over the United States, all over the world. Right now, it's active about 11, 12 hours a day. A day like today, it's going to be active all night, too. Bottom line, check it out. 30 days. It's for free. Tell all your friends about it. Come on over and check it out. Volatility's out here. When you get volatility out here, you get a lot more trading options inside the marketplace, and we have a lot more eyes and ears in the marketplace, and guess what? There's only good for that. The market out here today, what's going to be intriguing is this, is that you have the new chair, Powell. He is going to be testifying his second day tomorrow. So it's really intriguing looking at this market right here. We're going to see, bottom line is that how he's reacting to a market that if we take a look at this, let's go look at his intraday. So intraday from yesterday. So what you have is that you had Powell speaking, yesterday. Bottom line, market, pulls down. We had a high out there of 27.89. That baby closes out at 27.42. So first day comes down. Today starts to get a little juice inside it. Couldn't handle it. Gets down. Bottom line, what we're going to be doing tomorrow morning when he's starting to talk to the Senate once again, you are going to be at lows. What's going to be intriguing here is that I suspect the way that the bond market is trading, whatever is said, it looks to me that it may just get a little more dovish. Or he won't be as candid as he was yesterday. I mean, the bottom line is that as to the new Fed chair, it was actually pretty cool. I thought how he just talked in basically common terms, which is great. I mean, that's what you're looking for is transparency. The real bottom line is that we'll find out if the market likes transparency. More than likely, It doesn't, but what you do have is this. So picture this. If you have the transparency that he's saying, hey, listen, you know, what he specifically said yesterday that I think the market was looking at, he was saying that from December to where we are now, all that data was coming in, and that was the data that not only himself, but the other Fed governors were going to be looking at to come up with, are they going to go up on the short-term rates March 21st? Now, the Fed fund futures rate, the probability is 86% that they will go up 25 basis points. So we'll see how that does shake out. What is also going to happen, I suspect, before the 21st of March, is that we have quite a few vacancies right now on the Federal Reserve. I suspect they are going to end up getting filled. Some of them better get filled. That's the real bottom line. Excuse me. Or you're going to have a very narrow view of what is happening in the different districts of the Federal Reserve. We go take a look at the rest of the higher volume stocks out here today. You had Advanced Micro was up 23 cents. Snap was up $1. Lowe's got hit. Lowe's is down $6.20. We're going to go back to that. Celgene got hit. That was down $8.66. Discovery Communication got hit. That was down $1.77. We'll start off right now with Lowe's. So Lowe's come out with their numbers. Bottom line, numbers weren't bad. But what you had is that the... Okay, so we got an ABC structure on the way down. You broke your B point with volume. Your A point is $108. Your B's 92, so you got $16. That brings you down to $82. Right now you're at 89. That's an ABC structure down to 82. Let's bring this back. Oh, this is going to be wild, okay? So with the lows, that's where we broke out of, $83.65. That's when we broke topside. You had the volume on the break, so this is pretty cool, actually. 82.23 is where we broke out December of 2017. That's what it's going back to. You know, so we'll see how we get down there. Right now, you have volume on the way down, but we're a long way from the $82 level. And what you had there is that your same-store sales were up 4.2%, but guess what? In comparison to Home Depot, bottom line is that they are not growing like Home Depot. Home Depot is growing at same-store sales 7.5%. They're at 4%. That's not enough. And what we do have now, this is a good indication too. Looking at Home Depot is down 271. You're trading 182.27. Now, what's going to be cool is this. When you have high volume lows, and we have them in all sectors, we have them in the whole market, it looks like Home Depot is going to be one of the first ones down there because it's already into the bar. The top of that bar was $191. The bottom is $175. So the kicker is going to be, do we build cause as we get there, or do you just blow it away? It's an ABC structure down. That will give us an indication of where the rest of the market is also going to go. And right now with Home Depot, you did have an expansion of volume. You did 6.4 million. 2 days ago, we're trying to get into the high, not the highs, but you're trying to get into higher price with 4.6 million. This is saying that this thing's going to go for it, 175.42. That's pretty cool. When I say that, it's pretty cool because the market will release that information when we get into those prices. Let's go take a look at the XLE. Now, the XLE has been telling us for quite some time that the physical price of oil is going to be coming lower. The XLE is off its highs of $78.39. That high was generated on the 24th of January. What it's also telling us, now this is pretty cool, this is the first one I've seen so far that is actually into the bar. The bar of the low in the XLE, February 9th, 67.58 is the high. We are at 66.74. You've done 17 million shares, so we had an expansion of volume. This is going to go after it tomorrow. That's going to tell us a lot, huge amount. You break that, And if we have a break-in with conviction, guess what? We are going south, man. ExxonMobil, same setup. Exxon's off its high of $89. You're at 75, and you had the expansion of volume. And you're in the bar. The high of the low out here on the 9th, $76.48. The low is $73.90. And the way this is interesting, because the way that Exxon is trading, this looks like it could be a monster ABC down. This will be wild, man. Let's see, what day was it? Today's Wednesday. It'll be, well, Exxon has the high volume low. Exxon's going to 71. This has a high volume low at 71. Brings you back to September of 2015. The setup's there, baby. You stay right there, folks. We'll be coming right back. We had the Dow Industrials closed down 380, NASDAQ off 57, S&P's down 32. Don't forget, folks, this is the last day. Come in the Tigers Den, 30 days absolutely free. Tell your friends. Go to TFNN.com. You're going to see it right on the front page. Coming right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tigers Den. For this month only, you can get a full 30 days of Tigers Den membership without paying anything. The Tigers Den is our interactive chat room where you can chat with other Tigers and Tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tigers Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finish down 380, NASDAQ off 57, S&P's down 31. Let's go take a look at Salesforce. So Salesforce, let's go see here, CRM, they just come out with numbers. Salesforce closed at 116.25. It looks like bottom line is that yeah, they're trading right where they closed, which is kind of intriguing because let's go see what they have to say. number-wise. Looks like I think the sales come in pretty good, but we'll see. Salesforce gave revenue forecast that topped the analyst estimates. Sales may be as much as $2.94 billion in the current quarter, the San Francisco-based company said in a statement. It also raised, I see, so they're not coming in with the numbers. They're just saying what they feel like. So they're giving a heads up. This is interesting. Okay, so let's see, CRM. So I see. Okay, this is a big number, though. So Salesforce is coming out with its numbers on the 28th. This is a heads up that they're going to come in with a better number. Interesting. So sales will be as much as $2.94 billion in the current quarter, the San Francisco-based company said in a statement. The company also raised its 2019 fiscal year revenue to $12.65 billion. The estimate before this was 12.5. You got the chief executive, which is setting a goal of increasing annual revenue to at least $20 billion by 2021. This is the market leader in cloud-based software to manage client relationships. Revenue climbed 24% to $2.85 billion in the fiscal fourth quarter. Analysts had projected 2.81 in that period. Profit after certain cost was 35 cents compared to 34. Yeah, I can see it's only a penny more. The company has multiple growth vectors across various cloud and is building critical mass. Revenue from the system that allows companies to build custom applications gained 37%. The biggest jump of any unit to 536 million. The marketing and e-commerce business, which rivals Adobe's, increased 33% to 397 million. Sales of the company's flagship tool for managing customer relationship rose 16%. Bottom line is that the big numbers all over the place. After the closeout here, what you did have, we'll see where this shakes out, but Hope Hicks, which was the White House's communication director, this is just coming across the tape, just resigned. Let's see what they're saying. She won't be leaving the White House immediately. Press Secretary Sarah Sanders said in an email, the New York Times reported she was resigning. Hope, it doesn't say much. It doesn't say much else. She was testifying yesterday. We'll see where that whole thing is going to shake out. But the bottom line is that she just resigned. So let's go over and we take a look at that oil market. So we had out here today, oil numbers came out today. Oil goes down, and we did come down with volume expanding. It's down 2.3% today. Inside the oil market, we did 751,000 contracts, and what that is setting up, that oil now can get back to $57.90, and we'll see if, in fact, that's going to stop there, or we're going to start taking a hit in this oil market. What we are going to have out here tomorrow morning at 10:30, you're going to have the natural gas numbers. Natural gas right now is trading at $2.67. This has been kind of hanging at the 260 to about the 256 level. You had sideways movements out there today inside the natural gas market. Oil, I suspect, though, is the big number. When I say by the big number, what we're talking about is ExxonMobil. Actually, let's go look at Chevron. We hadn't looked at Chevron yet. Yep, Chevron on expansion of volume also. So Chevron's down from 133. You're at 111. It's into the bar big time, meaning the downdraft bar from the 5th of February. You have the expansion of volume. Let's see what else we got here on a weekly. This is dangerous for Chevron, too. Yeah, so Chevron has volume off its high. You know, Chevron was much stronger than Exxon, too, by the way, folks. But guess what? We take this on a weekly basis. Let me put it on a monthly basis. On a weekly basis, you have volume off the high. On a monthly basis, it never made its high. It was trying to get into 135. You made it to 133.88. Come off the high with volume. This is game down to like 94. Right now, you're at 111. You know, so bottom line is that both the aspect of Exxon, Chevron, as well as the XLE is saying that that baby is going south. Let's go take a look at Transocean. Now, this is an equity that has been down for quite some time. This is taking the next leg down, too. And what this is all about, of course, is this is all about shale oil. Shale is taking these riggers to the cleaners. You know, this equity, going back to 2008, was $163. You're at $9. You're not only at $9, but if I bring this back a little closer, what you're going to see, I'll take it in 5 years, this is going to go after the lows of the past 5 years, and it's right next to them right now. So you're at $9.11, $9.11. Your swing low is $7.60. February of 2016. You know what this looks like? Let me pull this. This is barreling into this with volume. This is going to be really intriguing, man. The shale business is going to put these guys out of business. Wow. Intense. Yep, that's the way this looks. Let me look at these numbers here for a second. So you get rig. Wow, I can see that. Look at this. You talk about shale taking business. Holy cow. Okay. 5 years ago, they were doing $9 billion, $9.2 billion. They plan on doing $3 billion this year. But if you want to see something dramatic, that they were doing as much almost in a quarter in 2014 as they're doing in a year now. This is heavy business, man. The loss projection went up dramatically. You can see, you know, you go down that dramatically. They're going to lose $62 a share this year. They expect 61 cents a share next year. That keeps going down like that. Forget it, man. They're going to be going south. Let me just look at Diamond Offshore, see if that's the same way. So Diamond Offshore is trading $14.50. The difference with Diamond Offshore now is this. Rig is deep drilling huge oceans, okay? That's what their specialty is. Diamond Offshore does the same thing, but they don't have to go as deep, meaning that they don't have as many rigs that cost as much that have to go as low. But guess what? This is $14.50. This is going to go after $10. The difference, however, looks to me, yeah. So Diamond Offshore can stay in business. That's what the difference is. Let me see what these numbers are. So Diamond Offshore will do the same thing going back 5 years. Yeah, see? Okay, so Diamond Offshore went from $2.8 billion to $1.3. It's bad, but not as bad as rig. Different ball game. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We had the Dow finish down 380, Nasdaq off 57, S&P's down 31. You had volume in the move down, folks. If we do go overseas and we take a look at overseas, we'll go to the Nikkei. These markets are going to be trading out here in approximately 5 hours. Nikkei last night was down 321. You're at 22,068. You're going to see the Nikkei tonight. In fact, the Nikkei had volume on the way down last night. So the Nikkei is going to be making its way also down into the high volumes lows that the Nikkei has. That was first one was established on the 6th, which is 21,078. The next one was established on the 14th, which was the test of that low. It had lighter volume. That's where that bounce came in. Nikkei got up to the gap, gave it up. I don't expect the Nikkei will go after this low tomorrow, but bottom line, you can expect that we are going to see lower prices in Asia when they do open. If we go to the Hang Seng, we take a look at the Hang Seng. Hang Seng right now was down 423 points last night. This trading at 30,844. Also had an expansion of volume. So bottom line, you're going to see that lower out here tonight also. Don't forget, folks, this is the last day of February. Last day to get in the Tigers Den for free, 30 days. Come over to our website at TFNN. You can get in there growling and prowling with all the Tigers and Tigresses right across the world, free. You get the volatility in the market. You got a lot of eyes and ears in the market. Beautiful thing to get going with. And, of course, don't forget, you can get us 24 hours a day. One of the easiest ways to get Tiger TV, folks, and bring us along wherever you're going is go to YouTube. As you go to YouTube, just put TFNN in the search bar. All the programming's right there. The easiest way, you just subscribe. It's free. Every program that we do live, archived, is right there at YouTube. Bottom line, you get the audio, you get the video, you get a great education. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need's right inside you, folks. Go have a blast with it. Thanks for being here. Look forward to speaking to you right here tomorrow morning, 8 o'clock. Look at them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.